Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Guys, please bear with my voice. I'm having a very bad sore throat and possibly you will find my voice a little bit harsh today. Alright. So as usual, I'll be starting the weekly sectoral analysis from the weekly time frame chart. What we can see over here is price has retraced from the top by almost quarter to 4%. The overall trend in the weekly time frame chart is surely up. There is no doubt about that. But we are at a support and prices have come down. The momentum is not on the upside right now. The immediate support in the weekly time frame chart seems to be around 19,250, or you can say 19,200 as a round figure. Okay. In the daily time frame chart, things are all over the place. You can see multiple positive candles over here in the last many trading sessions. And in my previous Nifty and Bank Nifty short-term view videos, which I share with all of you on weekdays, I clearly mentioned that Nifty needs to sustain above 19,500 with a big green candle, something like this, like a bullish bell tool. But what we instead got over here was not a bullish bell tool, but it seems like a high wave candle, not exactly one, but although it looks like one. And after that, we had a big red candle. So this entire up move, this breakout did not qualify properly for a proper methodological breakout, and due to which the prices can rally on the upside. And after this false breakout, markets collapsed on the downside immediately on the same day, and even on the next day we had a gap down. And now possibly the trend is down in the daily and even in the hourly time frame charts. They are hanging on to a support of 19,250, 19,200. Once possibly we close below 19,200 with a convincing red candle, then we can correct probably 100 to 200 points even lower. All right. And on the upside, now we'll have to surpass 19,500 and 19,600 also for a proper rally on the upside. Bank Nifty, again, it's the trend is flat in the daily and even in the weekly time frame chart. In the weekly time frame chart, you can see prices have retraced from the upside. Trend is flat. The previous week's candle is a spinning top. This week's candle is an inverted hammer, or you can say a shooting star. So overall state of trend is completely flat. We are at a support, but there is no possibility or any sign as of now, apart from this hammer, that we can rally on the upside. And maybe it is possible that in next 1 week also we could consolidate even more until and unless some important levels are taken off on the upside. All right. And especially in an environments like this, like you can see the first day over here, if I compare the three candles, the first day is a big bullish candle, then we have an inverted hammer, which is completely opposite to the first candle, and then we have this particular candle, which is a hammer, which is again opposite to the previous candle. So in such days, such trading environment, it's very, very difficult to make money, and it's better to possibly stay at the sidelines and wait for better opportunities. Okay, let's have a look at the PSU banking pack. PSU banking pack, I guess it's relatively better in terms of the index, but yes, the stock SBI, which is the leader of PSU banking stocks right now, is underperforming and it is consolidating. In the daily time frame charts and even in the weekly time frame charts, it's looking completely lackluster. So I have no comments on it. But as a sector as a whole, I guess the sector is consolidating. The trend is up in the weekly time frame charts. Things are looking okay. And one stock seems to be slightly outperforming in comparison to other stocks, which is PNBS. On Friday, it did come down, but overall, if you look the trend in comparison with other major stocks in the PSU banking pack, which is the SBI, PNB is looking much better than that. Private banking pack is looking very much similar to the Bank Nifty chart. You can see same thing, a bullish bell tool, inverted hammer and a hammer, and same thing is visible in the private banking pack also. So I guess overall things are very, very flattish, consolidating, confusing, But one ray of hope I can say is Axis Bank. The way it has recovered from the lows is a really good thing to see, and especially when it has been able to bounce back from this decent support band. So overall, it seems to be an outperformer, and positional traders can keep a watch on the stock. Energy Pack. Energy Pack was looking very strong when it was rallying, and even right now it seems to be pretty fine. The thing is, we have been able to produce a trend line breakout over here, and many times it does happen that after giving a trend line breakout, prices try to retrace possibly the support which has been provided by the trend line. So this is what is happening right now. Now, how much lower this particular energy pack will come is difficult to say. I guess a lot depends on three stocks. One is obviously Reliance, and you know that some events are coming up in the next week, so we don't know how Reliance will be trading at that point of time. And there is a weekly gap over here. It can happen that Reliance might try to come down and try to fill this gap. Overall, it is consolidating in the daily time frame chart. In the weekly time frame chart, things are okay, apart from one thing which I don't like, which is the negative divergence in Reliance Industries. You can see higher highs and lower highs in RSI in Reliance Industries. This is the one thing which I don't like. But apart from that, things are okay. And one stock which is outperforming in this particular pack is GAIL. Okay. Metal pack, I guess, tried very hard recently, couple of times. One is over here, and this is the second bounce back. It tried very hard to sustain the entire bullishness which it has been maintaining over the last few months, but it is still unsuccessful. And you can see the momentum. The RSI indicator is going downwards. Overall trend is up in the weekly time frame charts, but it seems after a recent rally in the metal pack, things are trying to cool off and the sector is trying to retrace. Auto pack completely lackluster, I should say. You can see a lot of small candles, and generally I don't like indexes or stocks which have a lot of small candles. A lot of consolidation makes no sense to me, because you can see prices are completely sideways. So again, as a trader, I would like to wait and watch and see how things pan out. If the auto pack manages to close below this 15,000 mark and below this wick of the candle, then possibly lower levels are possible with you can say short-term biasness on the downside, but we will need to first crack this level. If this level is not cracked, then there is a possibility that prices will just keep jumping up and down in the auto pack. So just be careful when you're initiating trades. And again, I feel that as a trader, I would like to keep my trades in the auto pack extreme short term, if at all I find any stock in this particular sector. Okay, let's have a look at the IT pack. IT pack, thankfully, at least when things are not good in the overall markets, IT pack has been able to sustain itself, not with a very strong momentum. Yes, there have been bad days. You can see sudden dip, and again over here sudden dip, and then a recovery. But this time we can say that after a sudden dip, a sharp dip, there is always some sort of recovery so far. So I can say so far so good. Even in the stock like Infosys, which has been very weak, things are looking okay. I guess once we surpass this particular gap, then things will improve psychologically for this particular sector, because many times it happens, many other stocks are doing very nicely. If you see stock like Coforge, it has done really nicely recently. But even if there is a sudden dip by Infosys, all the other stocks in the IT pack start correcting. Finance pack, you can say that the rally was pretty nice. The sector is now retracing, consolidating. It is at a very decent support band in the daily time frame chart. The trend is flat in the weekly, and the trend is down in the daily time frame charts. Things are very much lackluster. I wouldn't like to trade a lot in this particular sector. I would like to wait for this consolidation to get over. Yes, if this lower level is cracked, then maybe we could head towards more lower levels. But if this is not cracked, there's a decent possibility that we might continue the consolidation for even the next week in the finance pack. FMCG. Now, FMCG is one sector which has been rallying tirelessly since a pretty long time, especially since you can say the third quarter of 2022, and things have been very nicely going for this particular sector. Special thanks to the ITC, which is the leader of the pack. But now we have a trend line breakdown in this sector. The trend is flat in the weekly time frame chart. The trend is down in the daily time frame chart. And if we crack this recent low, then lower levels will be possible in this particular sector. Even in ITC, I guess similar sort of charts are visible. Trend is flat in the weekly and trend is down in the daily time frame chart. If we crack below this, then we can head towards lower levels. But I believe you will have to be very, very smart if someone is going to sell the stock, because the reason is we could be heading towards a immediate support over here. So be very, very watchful if you are initiating any trades. All right. But overall, it seems that things need to correct, things need to consolidate, and only then we'll have again a better risk reward ratio for the long sided trades. Consumption pack, again the same story. Things are overstretched, things were overstretched. Prices have come down. The last week was a hammer, or you can say a big long-legged doji, something like that. And this particular week we have an inverted hammer. So both these candles are completely contradictory to each other, and somehow this environment is not a very good environment to trade and make money. Even if you can see over here, things are not great. Prices are bouncing all over the place, up and down, and things are consolidating. And probably this will happen even further. If we crack this low, maybe little bit lower levels are possible in the consumption pack as well. Infra pack. In this sector, yes, you can say it has rallied nicely. Now prices are retracing. And again, in the daily time frame chart, the trend is flat. Things are consolidating. Prices are consolidating. But I saw one thing, that there was a sudden boom in the cement stocks. So as a swing trader, you can keep a watch on the cement stock. Apart from one stock, which is Ambuja, probably due to Adani or what, I don't know. But somehow the overall price movement is not looking that great. But there are many different stocks in the cement pack which are looking decent. Not this one, but I'll try to share a couple of them with you. One is obviously ACC. Second, you can have a look at Grasim. Grasim is an overall in an uptrend in the weekly time frame chart. In the daily time frame chart, it has retraced, and it is at a very, very big support band. So if it manages to bounce and give a breakout, swing traders can keep a watch on this stock. You can also keep a watch on this particular stock. All right. Yes, currently the candle is looking bearish, but if you check this band, it has been able to provide support multiple times, right? Even over here, there is a very good array of support. So once we test this particular support, and then if we bounce back, as a swing trader, you can keep watch. But the best pick, according to me, is going to be ACC, right? Okay, the next sector is pharma. Pharma, I should say, it has done very well for itself. Prices have rallied vertically in few of the stocks, and it needs to correct. It needs to consolidate a lot. This is just the beginning, I guess. And as a trader, as a swing or a positional trader, I would like to keep myself away from these stocks. And if I'm holding from lower levels, I'll be vigilant. If my trailing stop losses get hit, I'll try to exit and get out of the holdings. Okay. Realty pack. Now in realty pack, again, this was a very nice rally, and you can say that things are again consolidating in this particular sector. If we break this particular low, then we can head a little bit lower in this particular sector. There is a decent amount of support over here, but we'll have to see what sort of candle is formed. If we form a big red candle, then probably bears will come in control for the short term. PSE index. PSE index, you can say that slowly and steadily, you can say that momentum on the upside is loosening because there is some sort of divergence which is coming up in the RSI. This is a triple negative divergence, you can say. Three different highs in price which are higher than the previous one, and again in the RSI we have a triple negative divergence. So this is clearly visible, and if you check the daily time frame charts, we have started consolidating. You can keep the watch on the volumes, especially because if you are holding any public sector stock, if the stock doesn't fall, but if there is too much volume on the downside, probably there could be a sign of distribution. So just be watchful, and you can keep holding your stocks. If you have bought from the lower levels, just be aware, hold it with a trailing stop loss. If the stops are hit, just get out. Mid cap. Now in mid cap, if you check properly, the rally has been one-sided, but things are very much overstretched. In fact, the previous week's candle is also inverted hammer sort of stuff. And in the daily time frame chart also, things are okay. But at this level, I would certainly not indulge in a new positional trade, or maybe even a swing trade until and unless the risk ratio improves and we have some sort of correction which is coming up in the next few days. All right. So if you look at the overall market, there are not much trading opportunities present as of now, and we should not expect even the same from the market, because when markets are range bound, when markets are choppy, we always feel that why there are no trades, why I cannot make money. But it is okay, because in the last 3-4 months there had been ample of opportunities where we made probably a lot of money. And after this time, if there is a little bit of correction or a sideways consolidation, it is completely fine, because markets cannot trend all the time. Okay, that is what you need to keep in your mind. Stay light, trade less, and trade wisely. Thank you. Stay safe.